With demand where it's at, hey, it's tough. Sometimes you got to buy a home and you find yourself in a position where, unfortunately, you keep losing.
If you ain't first, you're last.
But you know what? There's ways to win, and I'm going to give you those ways. So you have to make sure you stay in tune, in touch, and watch throughout the video because sometimes you want to be a winner. My name is George Rodriguez with eXp Realty. I am a real estate agent here, located within Tacoma, Washington. But hey, we serve all over. So take a minute, pay attention. Do you find yourself in a position where you just happen to keep losing and losing on your real estate offers on properties? You know, in Washington State, things have gotten really competitive, but across the United States in general, things are getting a little bit more demanding in terms of what's out there for everyone to actually look at and purchase. But to really understand why you keep losing on your deals, we have to understand the market landscape. The inventory period is just too low for us to even sustain in terms of the need to want to purchase a home. With this spring buying season, the inventory being as low as it is, with Realtor.com saying it's down 20% since last spring season of last year, it gives the families, the individuals looking to purchase a home, just not enough to purchase. With that, families are finding themselves in a position where they keep losing on deals because unfortunately their offer just was not good enough.
Because maybe I'm not good enough.
Yes, you are.
No, maybe I'm not.
Yes, you are.
So let's really dissect why you keep losing your offers. A lot of individuals and families find themselves in a position where they're fighting affordability with the want and desire to purchase a home. It's almost a touch and base feeling because you don't want to put yourself too far out there, because if you can't afford what you purchase, then you're going to be in a more even rough position in terms of before you even decide to purchase. I've been there personally. I've been house poor, and it was really tough in terms of wanting to live my life and just knowing that I have a mortgage, a car payment, insurance. I have daily living expenses where you don't want to put yourself in that position because mentally, and me, a big believer in mental health, you don't want to put yourself in a position where you become house poor. So how do we combat these factors in terms of when we decide to put in offers? As your real estate agent here in this video, I'm going to go over certain factors that you can put forward for your contingencies that can put yourself in a better position without having to raise the actual offer price that you're putting forward. So let's really take a look at it. What's the first thing we always think about when we buy something? The price. You know, you're gonna go buy a car, let's talk about the price. How much can you take off? Unfortunately, when we look at that analogy, sellers are not taking off anything on their properties unless that property's been on the market for quite some time. And unfortunately, the ones that have been there for quite some time, there's for good reason.
This house is a fucking prison!
Not a lot of people want the house, so they're gonna have some defects or some type of issue that's causing them to stay there. If you can overlook those, yes, you can talk price on certain properties. But, for example, here in Washington State, homes are moving rather rapidly in terms of asking for less or asking for more in terms of seller credit. That may be something that you may have to give up, or you may have to go above asking to create that credit for yourself. I personally ask my clients, is it more important to you to have $10,000 in your pocket or use that money towards your loan? I would rather have that in my pocket, so I need that from the seller because personally I can't afford that, nor do I want to pay that. In this landscape, you have to go over asking to create that money for yourself. But what is that going to cost in terms of your mortgage payment? So let's just say you need $10,000. So let's use this property for example. Let's say we're going to purchase this property at asking at $599,950. So our average estimated mortgage payment is going to be looking at $3,643. But let's say we need to create that $10,000 for yourself to actually proceed forward without having any type of closing costs. So for simple math, let's go ahead and increase this offer by $10,000. Yes, I know it's more than $10,000, but let's increase this offer to $610,000 and see what that's going to do to our estimated mortgage payment to see if keeping $10,000 in your pocket is more worth it to you than increasing your mortgage payment. Increasing your mortgage payment by $61. So is it more important to you to actually keep $10,000 within your bank account, or is it more worth it to pay $61 more a month? That's a question you're gonna have to ask yourself because this could change things on your offer you're gonna be sending in. Does this make you less competitive? It can make yourself less competitive, but you have to work forward for yourself. When I say work forward for yourself, you have to put yourself forward because at the end of the day, no one is gonna be paying your mortgage but yourself.
We owe him $200. He said if we don't pay him, he's gonna kill us. So you gonna loan me the money or not?
Not.
Place yourself forward, and if you need this type of money to assist you in moving forward in a more confident manner, then do that. The right property will definitely show up. If someone else goes over asking to just secure the property, you're gonna have to go over with them to basically assume the fact that you can have the best chance to win. It's a little bit tough and a dancing game because you can find yourself going a little too high, which can present problems for the seller because at the end of the day, they have to appraise at the amount because what you're requesting still has to be accepted and approved by the appraiser to allow the loan to move forward because, you know, no bank is gonna loan money on a property that they're gonna end up being negative in just to start off. So let's talk closing periods because sometimes this is going to be a very overlooked matter when it comes to your offer. Now, let's say if you were a seller and I would give you two offers at $500,000. This one's able to pay you $500,000 in 30 days, and this one's able to pay you $500,000 in 21 days. Most people are going to take the offer that pays them sooner, and that's something that you're going to want to really pay attention to. And this is where a good lender comes into play because most lenders are able to close a lot faster, but some can close a lot faster than others. Some people are able to close in 21 days, 17 days, even 14 days. Being able to adjust these closing periods can be very advantageous to save you some money and give you a better probability to win that home that you wanted. Inspections. Now, I'm not going to sit here and tell you to waive your inspection to win, but of course that's going to give you a good chance. But I'm not going to sit here and tell you because I am a huge caveat for inspecting your property before you purchase because you always want to know what you're going forward with. There are things that you can change on your inspection offer. For example, you can change your inspection to pass or fail, meaning if you pass the property and you say you will not ask for any type of repairs, then that's going to be very advantageous for the seller because they know, hey, if you believe your property is in good condition, don't worry about it. You're not going to have to fix anything. Or if you fail the property, then of course you go back into the market and you find something else. Another caveat you can change to your inspection request, you can lay it out up front. Hey, we're not going to ask for more than $2,000 in total for repairs. That gives a little bit of clarity and actual comfort to the seller because they know, hey, if I accept this offer that says, hey, they're only going to ask for up to $2,000, perfect. I'll take this one. And then let's say there's another one that says, hey, it's a straight up inspection. Let's roll. Clarity and the idea of upfront communication is going to change a lot of things for these sellers, and sometimes you just have to communicate. Of course, you definitely can waive inspection, and that's going to actually give you a huge probability in having your offer just being that more attractive. If you do decide to waive your inspection, you could just waive your contingency of that. Let's say you go ahead and say, hey, I'm going to waive my inspection, but we're going to still be doing an inspection for informational purposes only, and we will not be using that inspection against you, the seller. Now, of course, some still may be kind of weary in terms of, yeah, they just said they'll waive it, but they're still going to do it. Hey, that's one way in terms of contracts that you can actually manipulate things to still be able to get your inspection and get your information, but you may not be able to use that against them in terms of a reason to pull out of the deal.
I know you need to stay your ass on that porcelain. This is going to require a little finesse. We
are finding a lot of properties going over asking, and now this is kind of creating a little bit of drama in terms of, damn, how much do I have to pay over to get this home? You can have a escalation clause that, let's say, for example, you put an offer in at $510,000, but you're comfortable paying up to $515,000. You can add in an escalation clause that can increase by $1,000 each time someone passes you up to $515,000. And let's say an offer comes in at $513,000. You would then subsequently outbid them by $1,000 to $514,000. Now, this can be very advantageous because let's just say if you had the intent and you have the will to pay more, but you want to make sure you get the best deal possible, adding this escalation clause can prove rather importance in making sure that you don't overbid yourself. So I know you're finding this information helpful. So you know what, do me the favor and hit that like button and the subscribe button and stay tuned because we do this every week. If you want to win more, you want to stay in tune with the real estate market and have fun at the same time, you know what to do. A lot of times when properties are going over asking, there is a probability that that home may not appraise for how much you're intending to pay for it to ensure you win. What do we do about that gap? Well, let's just say if you purchased a property at $515,000, but it only appraises at $510,000. Well, the bank's not going to give you $515,000 to pay for the home, so the purchase price has to go down to $510,000. This is where a short appraisal form is going to come into play. Let's say that one person offers a $2,000 bonus to the seller if the appraisal comes in short. So it gives them some comfort of accepting that offer, knowing that, hey, if I come short, at least I'm getting an extra $2,000. Agents are going to accept that offer over the other one because it provides more safety and contingency for the seller, because in a market that presents more to a seller, you have to give them the most contingencies to make them feel secure.
Help me help you. Help me.
So I'm going to give you a couple examples in terms of best case scenario offers that you can present forward, and you can kind of use this as a template for what you could look for putting an offer in. Now, I'm not telling you to put these in, but hey, I'm just saying this is what I would tell my clients. Let's just say, for example, you're going to be purchasing a property at $500,000. Scenario one, if you want to have a decent chance to win, but you don't want to pay too much, you can put in an offer at full asking, and then of course minimize your closing time to 21 days, and then ask for an inspection, but do pass or fail. Now, this is going to protect you on all fronts because you're not going to be paying over asking. If you have that, inner need to not pay more, you can do this offer and you're still going to get your inspection. You're going to get a faster closing time, so it's good for the seller. And then at the end of the day, you're able to actually pull out if the inspection doesn't show up to, your demands. Let's just say the inspection was bad, but the seller is actually willing to fix everything. Well, all it takes is a little, addendum, and then they can still fix everything for you. Let's go to option two. Let's say you want to be a little bit more aggressive, but you also need some closing cost assistance. Let's just say you're bidding on a property at $500,000, but someone's going to be going, let's just say $5,000 over. You're going to need $10,000, so you're going to put in an offer at $515,000. With this, you're matching the same net as the other individual putting in $505,000 against you. You're now going to be offering $515,000 with a 22 AD of $2,000. So meaning, if they decide to go with your offer instead, you're going to be offering some contingencies in terms of closing in that gap of what an appraisal shortage may be. So they have the potential to lock in a deal at $507,000 instead. Now, if you want to make that stronger, you can do the same thing as we did in the previous deal and adding in an inspection addendum that's going to be saying that there's going to be a pass or fail inspection, or we're doing a full inspection instead. So option three, let's say you're trying to win this thing, full send. You ain't taking no for an answer.
I'm leaving here with something. You know what I mean? I'm from around the way. I'm leaving with something.
So let's say this property is going to be asking is at $500,000, and your agent, after doing his comp, says that this property is going to appraise at $510,000. What's the best foot forward for you? Well, you can go ahead and offer that $510,000, but have that escalation clause to $515,000 if you're okay with it. Now, with that escalation clause, with your escalation clause of $515,000, if you offer a 22 AD, the short appraisal clause, if you offer in this short appraisal, you're going to then cover the difference of what you're comfortable with if it happens to go under appraisal. So not only are you going to give yourself the best possibility to purchase the property at its perceived value, but of course you cover yourself if someone's going to go over you, and you offer that contingency of if they have a short appraisal. The most important component is understanding your limit. You don't want to put yourself too far in the hole, meaning if you're given a pre-approval of $500,000, it does not mean you got to use all $500,000. Having a good real estate professional and a lending professional is going to give you a better complexity of what real estate currently is in your area. And with a good communication process with all of the individuals involved, it's going to allow you the least amount of stress and the most success moving forward on your real estate transaction. So with this video, you're going to be able to put your best foot forward, put in the best offer, of course, speak to your real estate professional and decide what you're going to be comfortable with. And I'm telling you right now, show this video to them and they're going to understand everything I'm saying because it's what they want to say. But use me as a caveat to pull it out of them, all right? So my name is George Rodriguez with eXp Realty, and if you're deciding to buy or sell real estate within Washington State, you know what to do. Contact information is down below, and you take care.